is April 16th, and this is of course the video log that takes 30,000 to a million. I don't have a webcam today, as you may have quickly noticed. It's not working at the moment, can't get it to work. I don't know what's wrong, I'll figure it out. This is the account that you're seeing right now. I'm sitting at 72,678. And today I want to talk about Gamma. Last time I talked about Delta. Today I want to introduce you to another Greek letter, which is a little bit more confusing to talk about. So after I take you through the accounts, I'm going to try to help you understand what that letter means in your options, and maybe you can get some value out of it. So this is my account here. It was in the negative quite substantially at one point during the day, but there was a reversal. I was almost down to 70,000, and now I'm back up to 72,678, which is more than $2.5 grand, I think, improvement from last video, maybe $3 grand, something like that. Mainly due to Cameco and Apple. I've had some big gains in Apple here, as you can see, and the option underlying under Apple also did pretty well. I'll show you that in a second. Royalty income. The Russian market went up, aftermarket's pretty hard. There's a lot of aftermarket movement here on Thursday night. So as well as, well, I'm going to try to get rid of this position actually, Royal Caribbean. I don't know about the long-term outlook anymore. So moving on further down, the main reason I think is, Cameco's been really strong, and that's what's been lifting my account higher and higher. It's actually gained $450 today, but the options went the other way because I've sold a ton of call options against Cameco. Cameco dropped all the way down in the $5 range during the big panic of the virus, and now I'm actually positive. This number here was down, instead of plus 225, it was down like minus 4,000 or something like that at one point. So I recovered a lot of those losses here in Cameco. As you can see, all these contracts here, 12 contracts, I've sold calls against my positions in Cameco. Out of the 1,500 shares, 1,200 of them, I can already say goodbye if they happen to finish over $10. In one case, over $9. A couple cases over $11. Now, that's the account. Let me review some of the lower parts here to make sure I didn't forget anything. Now that's about it. Disney up a little bit, Visa up a little bit. The market's rebounding hard after market. Okay, now Gamma. So I've drawn a chart to help you understand the movement of the Gamma, but first you won't be able to see it here because the browser, I don't want to move the browser. So instead, what I'm going to do, and I'm going to show you the Apple option on the phone instead, so you can see what it looks like. You can see I have one contract expiring on in next year, and it's up $340 today. And we know that from last video that the delta is responsible for how much the option moves for in terms of what the move of the underlying asset is, which is a stock of Apple, right? So because the delta is sitting at 0.5 roughly, that means that for every dollar that Apple goes up, this option will go up 50 cents. Okay, that's what basically it means. But now I want to talk about Gamma. So the Gamma is basically the rate of change of the delta. Okay, so it's going to sound really confusing at first, but I'm going to try to break it down and really explain it. Okay, you can see the Gamma here right next to the delta where it says the Greeks. Okay, so that's the second Greek that we're going to talk about. And the rate of change of the delta. So both of these terms, both of these Greeks, are percentage based. So if you think of one as 100%, then 0.51 would be, 51%, right? So if Apple goes up, the delta is 0.51 or 0.52, if you want to round up, then the option should go up. For every $1, it should go up 52 cents. And the Gamma is the rate of change, okay? So for what it means is for every dollar that Apple goes up, then the delta will actually increase with that amount. Okay, so you can actually add these two numbers together. It's not 0.0041% of the delta, it's 0.0041% flat. Okay, so we would add 0.0041 to 0.5167, just add it on top of the delta, and that will be the new delta basically at this higher valuation. And it makes a certain sense, right? So as the price approaches infinity, your delta should be closer to 1, right? Perfect correlation, because if we're talking about Apple going from 300 to 10,000, then if you're sitting at, sitting on a $300 call, then the correlation is going to be basically 1, especially as you come closer and closer to the expiration date. Now, the way gamma changes, okay, because gamma also changes as well as the delta, right? The gamma just basically how much the delta changes by. And you can get an idea of how the gamma changes, and it's a little bit more complicated than that, all right? So far, perhaps you have understood how this works. But let's take a look at how the gamma moves, all right? So I'm going to go back into the browser here, and I've made this graph for you here, okay? So let's take a moment and understand this graph. So the yellow is the price of Apple. Okay, so at first you see in the first part of the first part of the graph over here in this area, you can see how the gamma is steadily increasing, okay, as everything is pretty stable. All right, as the price stays stable, the gamma will actually increase, okay, because there's greater predictability as to what's going to happen. All right, so it's starting to predict that the price of the underlying stock is going to basically stay at this price forever until expiration date, and so it starts to increase the delta at higher and higher amounts. All right, but all of a sudden something happens, right? And the stock becomes more volatile. It's this middle region here. What happens to the gamma, as you can see, starts dropping, okay? Because things become more uncertain, okay? It's no longer a sure thing that the price is going to go at the strike price. It's not going to be as stable, right? And so the rate of change actually, the rate of correlation actually decreases, because it has to take into account all kinds of possibilities. Okay, the price could actually go, right? It could actually go down because it's so volatile. All right. And then in this last part here, you can see it goes up only because it's so close to the expiration date. Okay, this is the expiration date here, EXP. So the delta and the gamma will go up, all right, because the delta is trying to catch up to 1 and 1. Do you see what I mean here? This is how it works. This is how it moves. And if you're interested to see how the delta moves, I made a graph in that last video, so you can check that out. But basically, the gamma is the rate of change of the delta, and a lot of that is this data is used to calculate things like implied volatility. So let me show you something here. Let's see. All right, so the phone. You can see that there's a stat here called implied volatility, 31.43%. So Robinhood actually calculates implied volatility for you which is very convenient, but you can get a more raw look at calculating volatility by using gamma, okay? By using the relationship between the gamma and the delta and the stock price. So that's kind of a more hardcore, like stock options guru type of look, okay? And you can start to understand this. If you want, you can go to different examples. Like for example, I'm gonna go to the EXK option I have here, right? Which is basically at 1 penny right now. So if you were, because it's so extreme, the price is so far away, EXK is like in $1 range. The rate of change for $1 of the price, okay, because the stock is priced very low, and because it's so far away from strike price, okay, the gamma should be actually very high because it's a $1 move, right? If it moves by $1, it moves a lot. So let's see. Okay, so gamma, you saw that for Apple was 0.004. This one is 0.2776, so it's a lot higher. Okay, and the delta is 0.06 at the moment. So the delta is very, very, very low. You saw that Apple is 0.5. This one is 0.05, 0.06, if you want to round up. So if EXK price goes from, let's say it's $1.80 right now, I forget what it is. Let's say $1.50. If it goes up by $1 to $2.50, which would be closer to the strike price, the delta would actually move by 27%, and it's currently sitting at only 6%. So the range of change, okay, is going to be enormous, right? It's fivefold or more. Whereas the rate of change for $1 price action on Apple is very, very small. Most of that has to do with the fact that Apple is priced high, okay, because Apple is a $300 play, and EXK is $159. All right, so I know it's a little bit confusing, but you can rewatch this and try to figure out how it actually works. But that's basically what gamma means. So good luck to you all. If you want to explore it, try to understand options better, start with the Greeks, and maybe I'll cover another Greek next time. As far as the account goes, you know, I'm thinking of deleveraging even more. So my week performance is pretty solid. Month performance very solid, I think, 24%. Past 3 months looks like this. All right, now let's see the leverage that I have on the account here. It's sitting at 20%, 0.69, and total assets 91,600. Now that's pretty good, but I think that the bull trap is nearing its end. So I wish maybe tomorrow or today, if you're listening to this on Friday, hopefully I deleverage a little bit more into this rally before Monday, and because I'm anticipating a little bit of a reversal here. We've gone too far up too fast, and we've regained too much ground for there not to be another down leg. So we'll see how it turns out, but I'm definitely not going bearish. I'm just deleveraging. Okay, I'm trying to get rid of another $18,000 worth of assets here before any kind of downturn. So that's about it for today. Hopefully you enjoyed this and learned a little bit. I'll talk to you all probably on Monday. Peace out.